Okay, so listen, we have 5 people. We'll probably have about 30 minutes to chat, and then we're going to open it up for 15 minutes for you guys to ask your questions, which are probably more germane. So to that end, I'm going to start by, obviously, we've all been introduced. So what I'd like to do is have you guys not introduce yourselves, but introduce what you're doing related to the blockchain, which describes kind of what you do.
Absolutely. So I'm working with 2 organizations. One is Blockchain Learning Group and one is Blockscale Solutions. On the learning group side of things, we focus on education for corporates, governments, and schools. Really looking to kickstart organizations' blockchain initiatives, get their hands on the technology, really understand where it's applicable, and get over that initial barrier to entry. Then on the Blockscale Solutions side of things, we actually have strategic partnerships with the United Nations as well as several governments in Asia. So we are looking to do what arguably blockchain was initially pointed to do, which is empower citizens in developing countries.
Great, thanks.
Hi, thank you for having me here, and thank you for staying for our last panel. At Deloitte, what we try to do is help our clients think past the hype of blockchain and helping them identifying the right problems that are suitable for this technology. Because to be very frank, we can't boil the ocean with this technology. I'm sure you all have heard that. But so we help them across all our different service lines and thinking about this new nascent technology. That's it.
Great, Genia.
Cool. So I literally just started the TMX this Monday, and Let me preface that by saying that I was at the Blockchain Research Institute for a year as one of the founding staff. So some context on the BRI. Has anyone here ever heard or read the book Blockchain Revolution? Put your hands up. Okay, you all. The rest of you need to go and read it. So that book was written by a gentleman named Don Tapscott and his son Alex Tapscott. They wrote the book. It's considered, one of the main sources of knowledge about learning about the space, in the industry. They wrote the book, then they started a think tank called the Blockchain Research Institute. We worked with, IBM, FedEx, SAP, Accenture, many levels of the government, and a bunch of startups. And of course Deloitte and KPMG and the Big Four. And I just recently, like I said, moved over to the TMX to help build their crypto brokerage. And the reason this is important is because this is the first cryptocurrency brokerage in the world that's backed by a public financial institution. The rest are kind of working in gray areas.
Great, thanks.
Hey guys, I won't bore you too much with my background, but I've been in the blockchain crypto space for years when Bitcoin was like $100. So I'm not a newbie. I've been here for a long time. What we do is I'm the co-founder with Dmitry Buterin, which is the father of Vitalik Buterin, co-founder of Ethereum. And basically we're the world's largest online trainer of blockchain developers, and we help blockchain companies onboard new talent through crypto bounties.
Great, and Doug, we know, but just tell us what we do specifically.
Sure, yeah, my day job. I work for the Burnie Group, which is a consultancy here in Toronto, and I lead the blockchain disruptive technologies practice, and we, much like my colleague from Deloitte here, we help organizations understand basically if you have a new kind of infrastructure that allows for certainty of identity and a common version of the truth, what kinds of business models in insurance and supply chain and logistics and in fintech and in healthcare could you build on top of that new infrastructure?
Great, great. So let's start. Look, there are lots of layers of hype here. We all know that on top of blockchain, the first thing that we sort of were introduced to blockchain through was, Bitcoin, which there's no hype on, and then through that we were introduced to a blockchain, which was that fundamental underpinning. And then we got certain narratives in the market. The Tapscott family sort of wrote that first seminal book. So maybe I'll throw it to you, Jenny. Tell me about, how do you create a narrative about the use case of blockchain? You start with a book, you have an institute that evangelizes it. What is the narrative about the use case of the blockchain that you see?
Sure. So I'm going to contextualize this by saying that this entire world is it's a platypus. It's a lot of things, right? It's not just one thing. It's not easy to categorize. Also keeping in mind that it is nascent. It's constantly evolving. It's taking on different forms of manifestations. But there's two, as far as I can tell, there's two main narratives. One is on the cryptocurrency side, which we're all extremely familiar with all the headlines about prices hitting all-time highs all the time and then dropping back and crashing and Bitcoin's dying. It's not dying. And we have in that bucket also ICOs, which for those of you who don't know what that stands for, it's initial coin offerings, which is a new way to raise crowdfunding for protocols, for projects, sometimes for scams, and for technology companies. That's one narrative. The second narrative is how can we strip away the cryptocurrency aspect, sanitize it, and just use the blockchain technology to streamline and make certain processes efficient on the enterprise side. And so Louisa, I'm sure, could speak more to some of those potentially use cases.
Right. So we have this underlying narrative, this underlying sort of use case discussion. What can the blockchain really be used for that is fundamental? On that note of education. So Adam, you work for the Blockchain Learning Group. Mm-hmm. You go to schools and you tell them sort of how the blockchain works, right? So tell us a little bit about how you explain the value of the blockchain to neophytes and to young people.
So, fantastic question, and definitely a very challenging one, and something that we generally avoid doing initially is defining what blockchain is, because it tends to bore people and confuse people. It's similar to asking this audience, what is the internet? How many of us use the internet daily? How many times do we use it daily? Those numbers are large. I don't know, I struggle to define what the internet is. So really what we do is we begin with use case discovery, where we define problems that currently exist. We'll walk through the process of defining these problems. We'll define the parties that interact and are involved in these processes. We'll look at who are intermediaries, where are strong trust lines. And then we'll begin to define end state, and we'll more or less walk our way back to say, where do you want to be? Here's the technology, where do you want to be? What is your ideal end state? And then we'll take a few steps back and define what can we do today or tomorrow to leverage this new and exciting technology. But I think in that same discussion, there's always a significant transition in thinking from data storage and distribution and sharing, where, hey, we're going to do all our reporting and put it on the blockchain. We hear put it on the blockchain more than anything. And really, it's transitioning from that to looking to streamline processes and slash trust lines. So it's a very, there's a lot of growth and discussion, and it's a very iterative process as we progress from initially talking about blockchain at a high level into their problems, into nailing down a use case to move forward with.
Got it. So
if I may just add on to that,
please.
For a punchline, what we generally like to use is blockchain reduces the cost of trust, similarly to how internet reduces the cost of search, and semiconductors reduces the cost of computation, and machine learning reduces the cost of prediction. We generally like to start off with blockchain reduces the cost of trust inherently that we currently pay for through intermediaries.
Got it. And it makes it also immutable and more accurate than using intermediaries as well, right? So it's not just the reducing the cost, but potentially the
There are additional applications you can, build on top of it to achieve further value, but the simplistic form is that it reduces the cost of trust that we currently pay.
An ROI calculator.
I wish there was a very simple ROI calculator. Unfortunately, that doesn't exist, but we can try to identify areas where you can achieve benefits from using this technology.
Got it.
Yes.
So from Adam's perspective, to explain the value of the sausage, you don't have to take people back into the sausage factory. There's a value. So what is Louisa, what is the when you look at real world applications for the blockchain? How do you hone in on what is that one utility, that one value, the one that one application when you're talking to clients, when you're working with clients and engagements?
I don't think there is one perfect killer value for you to extract out of this this solution, this technology. I think you have to think about it from different aspects. When you're looking at problems that you're trying to solve, is there an opportunity for you to disintermediate someone? Is there an opportunity for immutability and audibility to be of value to you, where currently there are manual processes that are achieving those areas? Is there a value in automating your process via smart contracts? These are some of the questions and thinking behind what we do with our clients when we identify an appropriate blockchain use case.
Got it. So I'm gonna flip to Doug, who really isn't on our panel. there seems to be, this feeling that there's an urgency out there to solve problems, right, using the blockchain. There seems to be some sense of imperative to get into the blockchain. You have, guys like Facebook that 2 days ago did their largest reorg in history and shoved Marcus from messaging into this new initiative called the blockchain. Large corporations all sort of seem to be frantically looking to the blockchain for solutioning. Do you see that with some of the organizations that you historically worked with? Do you see that out there with corporate America, that there's a sort of imperative to get into blockchain because there may be something there that we're missing?
Yeah. The many discussions I've had with a lot of business leaders in a lot of different industries have a sense that there's something big and important here, and they're trying to learn more about it and understand what it is. The internet, I was at IBM during the 94 to 97 time when we spent a whole bunch of time running around trying to explain what the internet was to people. And at the time, people thought of it kind of as an entertainment, academic sort of thing, and running around explaining to people that no, actually, it was a new form of business infrastructure, and all kinds of new business models and business networks were going to be built on top of it. And it did two things really, really well. It allowed us to discover people, which we really couldn't do very efficiently before, and it allowed us to transfer information to them in a normalized way that they could unpack a data packet and understand what was in it. Those two things enabled all kinds of weird and wonderful new business models. But it was missing two fundamental things. One was the certainty of identity, right? That I know who you are, that you are who you say you are, claim you are, that you've got the rights and privileges and resources that you claim to have so that I can transact with you. And the second thing that it was missing was the concept of trust, right? That even if I know who you are, you've got something you want to sell me, I've got money, you want me to send you the money before you send me the stuff, I want you to send you the stuff before you send me the money, because we don't trust each other. And so we spend a tremendous amount of time and money on all these middlemen and intermediaries. You look at you have a stock and I've got some money and I want to buy your stock. Well, my money goes through a bunch of brokers and FundServe and some clearing houses and some custodians and some repositories and a bunch of other brokers. And it takes, depending on where you are, T+3, T+2 days and a whole bunch of money to complete that transaction. Well, that's because of a lack of trust. And so the question is, the blockchain, because of this very clever mechanism, actually solves that and creates these immutable records with this public definition that something is true and that someone is who they claim to be and has the rights and privileges they claim to have. Right. And that changes everything.
But you talk about banks and moving money. Ripple with XRP is not really it's not really a blockchain technology. It's a permission-based solution. It's not a public blockchain. So when you look at solutions, and maybe Ameer can talk about this, how do you identify what is something that is native as a solution for the blockchain?
So is the question what?
Sorry.
Go ahead. No, go ahead. I'm done.
There's two types of blockchains. Well, there's a couple, but for the most part, the narrative, when people think blockchain, they're thinking about Bitcoin or Ethereum. Those are public, open source blockchains. You can audit them, you can look at them, you can join as a participator, whether that's buying Ethereum or coding a smart contract on Ethereum. You can become an economic node, meaning you don't have to mine, you can just have your computer online, so you relay, you propagate the network. And so the whole point of these open source blockchains is they're not stuck in a box. They don't have to function due to legislations and regulations. Anyone can participate. Then you have the opposite world, which is private chains, which has use cases, specific use cases, for example, supply chain use cases. But this is more or less, you can call it a distributed ledger, more or less a blockchain. And they do eliminate a lot of intermediaries within enterprises. Like we're working with Afria right now. If you guys are familiar, a big weed company here in Canada. Can't really say what we're doing per se, but we're eliminating about 7 steps from their seed to sale process. And that's a lot of money they save on these 7 steps within their company, running on this, I would say, distributed semi-blockchain variation. The only difference, there's a big difference between public and private. For these supply chains for private, at least my use cases, speed is not necessary, right? And so you look at open public blockchains such as Bitcoin and Ethereum, a lot of companies trying to figure out, well, how do I use this? Speed's a big issue because everything has to be validated by everybody. Every single transaction, every single bit, byte, code put into it, everybody on that network must say, yes, this is accurate. And so big companies, if I was a big massive company like Deloitte or whoever, I wouldn't be putting my systems on an open source public blockchain. So these are two fundamentally different worlds. We have an open source blockchain world where anyone can participate, and a private blockchain which is closed.
Okay, so June 21st, 2017, Naval Ravikant had the Twitter rant, right?
Yeah.
And it's a great thing to, if you have a chance to sort of read through it. He started at 3 in the morning and he ended at 6 in the morning. And I think there were 36 posts through Twitter. And he talked about his philosophy on this flat ecosystem, right? So he ended, I think at 6:19 with saying blockchains give us a new way to govern networks for banking, for voting, for searching, for social media, for phone and energy grids. And he said, look, I thought that the internet would give us a flat economy, and it didn't. And now I believe that blockchain will revolutionize so many industries because it is a flat architecture, and because there's a payment economy in it which keeps it flat. So what I'd like to do, if you don't mind, is I'd like to go through each of you guys and tell us what you think is the killer app as an evangelist of the blockchain, and as you've heard, Ameer, sort of anarchist of the blockchain. What is the one thing?
Crypto anarchist.
Yeah?
Yeah.
What is the one thing that you believe will be that killer app, or is there a killer app that you believe resides in the blockchain that will fundamentally change an industry over the next few years? And
I'll go first. So there already is a killer app. It's called Bitcoin.
Okay.
In case no one's noticed, peer-to-peer, permissionless transactions. It's censorship resistant. Like that is the killer app. So everyone here knows what voice over IP is, right? Anyone use Skype, right? WhatsApp. Voice over IP. Bitcoin is money over IP. And any other derivative of that is also going to be currency and money over IP. So the killer app exists. It's just people want to brush that narrative away because it's dirty, and there's, in the early days there was drug dealers and Silk Road, and we all need to just get past that because new technologies are always adopted by, criminals first in order to bypass the regular system. It's
it's really important. People, they undervalue the significance of Bitcoin. Just yesterday, Australia made it illegal for us to transact over $7,500 in cash. And for you and I, we're like, well, who's going to transact, that much money? My family comes from former Yugoslavia. One day you have money in the bank, next day you have nothing in the bank. You look at the Venezuelan dollar, the bolivar right now, it's worthless. There's runs on the bank going around everywhere in the world. I have good friends of mine who live in Iran that their bank accounts are closed. They have millions of dollars. They can't access their money. So having a censorship-resistant, open-source, decentralized, peer-to-peer currency like Bitcoin is not money, it's communication. I can communicate with anybody in the world from point A to point B. There's no government telling me that I can't do that. And side note, talking about dirty money, there's a chain link analysis, the big consulting group. They did analysis, because Bitcoin is not truly anonymous, it's pseudonymous, right? Mm-hmm. Less than 0.2, so this is 0.2% of a percent was found out to be in illicit activities. You know what's the number one currency in the world for illicit activities? Can anyone guess?
The dollar.
The greenback.
Okay, so it's good.
Let me just finish my point real quick.
Okay,
The real magic of all this, and I'll name 2 use cases that are interesting, but I'll preface this quickly, is that you now have you have networks that are now financially incentivized, right? So before you used to have networks that are connected and decentralized, whatever, they weren't as sexy, no one goes around evangelizing regular databases, but blockchains are basically that, except they're distributed and they're also baked in financial incentives, right? So that's kind of the base layer. The 2 interesting applications, for me at least, are identity and verification. And we'll leave it at that. I don't want to cannibalize the conversation.
You're only allowed to give one,
I'll give one
killer app, and you did the incumbent one, so that's good. Next, what's the one thing? And I know you're working in India on land transfer initiatives. What is the one thing that you would want to call out as the killer app?
I can speak to some of our experiences thus far and really what we're seeing emerge from many of these countries and governments and organizations that we're working with. And literally within the UNDP, which is the United Nations Development Program, they aim to empower citizens. And that's really what we're aiming to do, is empower citizens and empower nations. So what we're finding to be the common narrative across many of these regions, countries that are almost starting from scratch, is that, as was mentioned, it starts with identity. That identity, I think, is absolutely crucial and solves a lot. Then what we're finding is there's a natural transition to land registry. So now you need something bound. You need some way to own and control and prove value and hold assets. And then the next step is commodity traceability, asset tracking. So we're looking at deforestation. Where did this come from? What's affecting this land in this region? Who's it owned by? So that's more or less the natural progression that we're seeing.
But as a bucket, specific to a little bit higher level,
Yeah.
what is the killer app? Is it identity and then supply chain management? Like what is the?
I guess if Bitcoin was the
Yeah.
initial killer app, I mean, now tokenization is exciting. We're looking at non-fungible tokens. We're looking at standard ERC, I'll say 223 tokens now, amongst others. I think tokenization is incredible, and literally what we did with the land registry was we tokenized the physical property. So now we're creating a non-fungible token that is in fact related and bound to this physical property in this region. So you can, as a citizen, conclusively know that you own this property at this moment in time. Should it be governed by this smart contract, these rules, et cetera, the ownership cannot be transferred or taken from you without this being met.
Got it.
So
Louisa, tell us about what you're most excited about, but also tell us about situations where somebody comes to you and tries to come up with a use case that really shouldn't be on the blockchain at all, but they think that it should be there for some reason.
that's the easy one.
Are you saying he's giving me the easy question? I'm kidding. No, I think we've had clients who come to us and say, we want to store all of this data on a blockchain internally between two internal teams, let's say. And we sit back and scratch our head and think, okay, is your current process not working very well? And are you trying to reduce your costs of data storage? Because blockchain really isn't the best application for that problem that you're trying to solve. So that's one example I can think of. But back to your original question of the killer app. We get asked that a lot because we work with a lot of corporates who want to move blockchain into a production state. But from what I've seen, there are more business challenges compared to technology challenges that we're facing. And if I had to place a bet on a killer app that will go into production in the next 12 to 18 months, I think if you're looking at the media sector in terms of content sharing and royalties payment for artists that are creating content and being able to being paid for the consumption of the content that they create in real time, I think that's something that will be very exciting that we might be seeing go into production.
Tons of companies come out,
Right.
DRM and supply chain management solutions with a built-in sort of distribution of rights, distribution of funds out there. So that is huge.
It's not to say that it won't happen for the enterprise space. I just think it will take longer.
Got it.
There are a lot of challenges that we need to overcome before we start seeing mass adoption and production-ready solutions.
Good. Ameer, my anarchist. Capital formation, is that a killer app?
The killer app actually has nothing to do with technology. It has to do with the mythology of blockchain. And so for the first time ever, we're seeing an exodus of talent all around the world and democratization of a technology that no matter where you live, how old you are, what religion you are, you can participate in this new economy. So it's the myth itself that is a killer app. We have kids out there who are 15 years old, who are geniuses contributing to open source code, who are making a really big fucking difference in the world, pardon my French. This wasn't possible a decade ago. It's possible today, and they're getting rewarded for the effort that they're putting in. And so right now we're seeing, as you mentioned earlier, brand new paradigms being created where the old system of creating an organizational system like this, where I'm your boss and I'm gonna tell you blah, blah, blah. Like for example, in our companies, it's flat, it's horizontal, very holacracy. We don't have managers. We don't have people telling you what to do. You're grown adults. You can figure out what to do with yourself, and the number speaks for themselves. And so now we have this idea this massive, beautiful idea, this open source idea, this myth of blockchain that has spread. It's wildfire. Facebook is doing it, for God's sakes.
Yeah.
And we're only at the beginning, and it's just going to grow and grow and evolve. And the next 5 years, or just say even the next 2 years, is going to be hard for anyone to predict.
Right. So to play the devil's advocate, so you've got this myth, you've got this opportunity, and it is manifest in many ways. You had, it started with, at least our understanding of blockchain came through Bitcoin, is the fact that the transactional layer used to be that you say, Bitcoin is really not as important as understanding the blockchain which powers Bitcoin. But is it that the transactional piece is actually powering blockchain and will make sure that it isn't repatriated the powers that be? Like when I grew up and we had internet, everybody sort of talked about the same thing. It's flat, it's empowering, everybody can get in, they can, open source, people can contribute. And then Leviathans came in and basically centralized the decentralized system. So what's to stop, you mentioned Facebook, like what's to stop these Leviathans repatriating the blockchain and taking some of that mythology back?
Two things, very simple. Number one, cryptography, mathematics, and science. And number three, money. Why would I want to go work in Facebook or be on that platform where they use my data and profit off me? Every Facebook user, and it's a private company, right? People are surprised, oh my God, they sell my data. Like, what the Of course they sell your data. What the fuck? That's their business model. It always shocks me when people are like, oh my God. Anyways, it's like $50 per person, right? So you do the math. And so we can have like a decentralized social network where we create our own utility token or governance layer token, where me as a developer, as a user, I benefit directly. Right? So you have cryptography and mathematics that Facebook can't go after, and you have monetization. Those are like really important key factors in this, let's say, new ecosystem.
Right. Doug, you were just
shaking.
You were responding in a cryptic way.
So Ameer and I have had this.
It's working?
I don't know what's happening here.
Is it working?
Just speak really loud.
Yeah.
It's working.
It's working. It's just speaking to the tie.
I fear that Ameer is falling into a little bit of a trap, that anarchy is the best way to maximize freedom. We have laws about what side of the road we're supposed to drive on, and that actually increases our freedom of transportation. We've got food safety regulations, and the fact that you have to label things if they have lead and things like that, and that increases our freedom to interact and transact in a safe kind of way. We've got SEC regulations that force proper disclosures and don't allow for insider trading so that the market works more efficiently. We've even got open banking regulations that are coming in because left to their own devices, there actually is a restriction on kind of the freedom of information and data because of the nature and structure of the marketplace. And so regulation comes in to actually liberate that freedom potential. So I'm not a huge, anarchy is the best way to maximize freedom and reduce barriers standpoint. But I actually found myself somewhat surprised to actually agree with a very important point that he was on. And that goes to, the reason the firm was created in the very first place was to overcome two fundamental problems: the search problem and the transaction problem. Yeah. Right? So we built these boundaries that inside those boundaries the people could move around with great flexibility because they had signed common employment contracts and they had a common IP regime and they had lawyers that told them what they were allowed to do. That actually liberates a whole bunch of internal freedom. But the reality is we're moving into this world of open innovation where the true innovation is happening in an open ecosystem. And the really great thing about blockchain, and don't forget I used to be the chief open source officer at IBM, and so I've been around this for a very, very long time, that's where real innovation is happening. And when we start to get things like blockchain that allow for the tokenization of value so that ideas and value can move around without the necessary boundaries of a firm, between various different firms, between various different individuals, to liberate that creative, innovative potential. That's really exciting. And in my way of thinking, that is perhaps the most important killer app out there.
The voice of God.
Can I just want to say one thing to that point, and your original question was, is there a fear of, the powers that be or these big conglomerates coming in and like gobbling everything up
or repatriating the power?
Yeah, or repatriating. So the answer to that is yes, you can probably make a logical argument for that to be the case, and there's plenty of history to prove that, but fundamentally, for the reason that I mentioned before, that these are now not just decentralized networks that are being, that are open source, but they're also financially incentivized. So for that reason alone, now that I don't have to worry about, going to another company to build something to get a paycheck, I can gather a few capable people together, start an open source project or contribute to one, and then incentivize myself through tokenization or other methods, and then that technology is outside of the boundaries of the corporate world or government or what have you. And so eventually all this, like to your point about innovation happening outside of big companies, like that trend is just beginning. Like the long tail of innovation is like we're at the beginning.
Just remember, cryptography used to be illegal. Just remember that. It was illegal.
No. I'm going to point before that, the illegal point. But you're absolutely right. And the reality is that the big companies recognize that. I mean, even Microsoft, who for years called open source a cancer and a plague and all that kind of stuff, even they have enthusiastically now embraced the concept of open innovation and innovation ecosystems and open source.
And you have to look no further than the last 5 or 7 years of just like this sheer amount of like M&A that goes on in these big tech firms. Like, why do they pay so much? Like, Walmart bought Flipkart this week for $17 billion. Why? Because they can't do any of that shit.
No doubt. But again, isn't the fear that some of these companies are consuming, buying innovation, and a lot of the things that potentially, Louisa, you're working on are solutions that are permission chains, which are something that a corporation can control, or a number of corporations can collaboratively control and drive consensus on. So that's not a pure blockchain play. That is not out in the ether. Sure. To mix metaphors. So is there a possibility that a lot of this hype and excitement can be taken back and served back to the consumer on a cold plate? In other words, we're talking about the excitement of the blockchain. Can some of these corporations come up with solutioning? You're talking about supply, digital rights management and other things. I've dealt with a lot of digital rights management that are taking their solutioning and they're not putting it on a public blockchain. It's a permission-based blockchain. Right. So it's controlled, by the stakeholders. Is what I'm saying. So
well, I think Ameer brings up a good point. Money is a very key incentive. The reasons why corporations are looking at it is because, one, they're threatened that new incumbents will come and take their market share, or two, that their competitors will get ahead of them and develop something and have a first mover advantage. So now they're thinking, well, we need to get involved and see what the hype is all about and whether there's two ways of thinking about it for larger organizations. You can either use it to increase operational efficiencies by reducing costs, or you're using it to think about new business models and thinking about how you can make money in a different way. But right now, this second part is, to some extent, a bit in the further distance, I'd say. Everyone is focusing on cost savings at the moment, which I don't necessarily agree with, but unfortunately with larger organizations and a new technology that they don't understand, they can't wrap their heads around it well enough to be thinking about new business models, which is where the startups come in. They're the ones on the ground, in the trenches, and moving fast and building fast. But at the end of the day, if a larger organization is willing to pay for it, I don't see the problem with that.
But the only difference in the traditional M&A that's happened over the last few years is you can't buy an open source protocol.
Right.
Right? So like that's the difference. And so by that fact alone, there will be a disintermediation process and it'll be death by 1,000 cuts.
Yes.
Got it. Which is a good place to throw out your questions to the audience. We have a few minutes. I'm sure you've got tons of questions you want to ask this amazing panel. So put up your hand, and I have to give you this mic. So who's that? Yeah.
Who raised their hand? So I didn't see you.
Well, just go with that guy.
Okay, thank you. So I have two questions. So the first one is, cryptocurrency is all about decentralization, right? So right now there are mining sites that own the majority. They combine. Combination of them, they own a majority of the total value of what's on the chain. So, like, how would you comment? The status quo that they can determine the price by selling and buying bitcoins and other cryptocurrency. So the second question is, Bitcoin can only process less than 10 transactions per second, right? So this processing rate is too low, and about the private chains. So is there, the speaking of efficiency, is it better, or what's the technical challenge?
So one of you guys take the question of scaling and answer that.
You're talking about Bitcoin. So the question is, a lot of people, it's consolidated wealth within Bitcoin, right? Which is nothing new. Those are power laws. So people who went at Bitcoin at the beginning and started mining, they made most money. This is correct for anybody that gets in early in any industry. Mm-hmm. Then you're talking about decentralization. Is that decentralized? And Bitcoin is slow because they only can do roughly 10 transactions a second, right? So there's a multifactorial answer towards that. When people say this decentralization, there's multi-levels of decentralization, right? You can have decentralizations of how many addresses exist in the world. You can have decentralizations of miners. You can have decentralizations of equipment. And then you can have this decentralization of OTC brokers. When people talk about price, they're not really getting Bitcoin. It has nothing to do with price. It has to do with the mythology and the ideology of Bitcoin. Price will always fluctuate up and down. Currently, as we're talking today, Bitcoin is viewed as digital gold. It's not really viewed as I'm going to go buy my cup of coffee because, well, why would I lose out on maybe doubling up my money next year? I'm not going to give any Bitcoin. I might triple or quadruple next year. So there's scaling solutions for that, such as Lightning Network, where the first Lightning Network transaction happened in a real coffee shop in Australia, what was it, like 3 days ago? Yeah. Literally instantaneously, you can buy your Bitcoin on a second layer solution. So you're going to have Bitcoin as a root chain where people don't care about speed. They don't want speed. They want immutability. They want censorship resistance. Then you have these second, third, fourth, who knows how far up we'll go, different layers, which you can opt into. You're not forced to use that technology. If you want to stay in the old school, super slow Bitcoin, and you care about security, and you care about holding your private keys, and you're the only owner of Bitcoin, nobody else is owner of Bitcoin, which I recommend, guys, if you have currency on exchange, take them off, keep them in your private keys, or else you don't own them. This is your choice. You can opt in for second layer, third layer, fourth layer technologies.
No, that's good.
To add to that, I mean, in the Ethereum world as well, there's many scaling proposals, even down to the core consensus mechanisms, block proposal mechanisms, etc. We're looking at sharding, which is quite scary. Thinking about splitting the Ethereum blockchain, its state, into potentially 100 shards that need to interact, essentially. As well as other layer 2 solutions, as Ameer spoke about in the Bitcoin realm. So we have micro-rating and the rating network, which was live for the best part of a year now, I think, as well as state channels, which there's a lot of active developments under one of these roofs over here. So there's a lot of work happening, and I think scalability is the biggest near-term problem that we have to solve in order for greater adoption.
Great. So we're going to have one more question, and then we're going to close things up.
So currently, I guess you say that
Speak up.
A lot of the value is related into the monetary value that these token coins have. But a lot of people today, and even in the future, are still going to be living, I guess, under a government and under a government system. And right now, a lot of currencies are truly treated as assets. So in terms of me trying to pay someone else, if it goes under, I guess, tax law or regulations trying to catch up, it's not treated as just me paying someone else, more like a capital gains and an issue for me as a person to adopt it on my day-to-day life. So where's the push, I guess, for regulations to get involved in that, or how do you work under that sort of system?
The real world meets the chain.
So I'm not a big believer that Bitcoin is a real currency because it's really more of a crypto asset. I mean, no one uses it to run around and buy coffee. As it was pointed out, you have to have layers on top of it, so it's a crypto asset layer that may back some of those more transactional things. It takes far too long, it's far too expensive. But I do think that the concept of a digital currency is extraordinarily powerful because it's much, much more efficient than running around with paper things or involving a lot of middlemen to, arbitrate transactions. And so I actually think that what we're going to see is some hybridization. The vast majority of real transactions, the exchange of values, whether they're underpinned with a currency or it's an internal token that represents some unit of value that is distinctive to a particular ecosystem, that those ecosystems will create their own private blockchains, and they'll exchange value very quickly and efficiently without having to deal with the overhead of having those and frankly, the security exposure of having those things, published all over the world. But they'll hybridize it by having some public ledgerless chains that only deal with, hash tables and Merkle trees. And by combining these things, you can have a bunch of entities inside of a private network that, by virtue of the fact that all the various different digital keys are published on a public network with much, much faster transaction rates and very, very low transaction costs, can prove that the piece of information that they have is true, that they're all agreeing on it, without that piece of information having to reside and be bound to transactions at the top layer. So I think that we're going to see the whole space evolve quite a bit, and we're going to find various different novel ways of dealing with the cost and the speed of transactions, and we're going to see a lot of hybridization of these different approaches.
So thank you, Doug. And for somebody who wasn't on the panel, thank you for your...
I was on the panel. I was invited to this panel like months ago.
Doug was on the panel first. I'm joking. I'm yanking your chain.
Can I say one last thing on regulations?
Look at I'm going to schedule
one more thing. In closing.
Okay,
Genia.
closing remarks, regulations. So TBD, all the regulators are looking at this. Like everyone's taking it seriously, from the OSC here in Ontario, SEC in the States, CFTC. The issue that they're having right now is because these, like I mentioned before, these things they're like a platypus. Like it's a duck, it's a thing. It's so many weird combinations of variables and factors, right? So you have crypto assets as like the main category, then you have cryptocurrencies, you have crypto commodities, you have crypto tokens. So the challenge with regulators is, bless their souls, they're trying their hardest, but they need the right advisors there to help them understand how these things should be treated and looked at and properly regulated without stifling innovation.
Yeah, I know, but I'm from Exchange, and that's a whole probably new panel. That is a different topic, but I mean, it is a good illustration of how hard.
It's hard.
It's so hard. I mean, in the U.S. with T0 and all this, I mean, they're putting things into cold storage to allow brokers to touch it. Like, it's so difficult to manage within the structure that we have in the real world. So it's this real world meets a new paradigm.
They need a new set of tools because regulators have a hammer, but not everything should be treated as a nail.
But the GBX in Gibraltar is a pure peer-to-peer exchange. So there are these evolutions in the exchange. And
just wait till decentralized exchanges happen in the next 2-3 years. You're going to
ATS.
have billions of liquidity that you can't regulate, track, or trace.
Yeah. That is a good way to end this. So, so thank you. Listen, this was an amazing panel. So I want a big hand. And like most panels, you never can go deep enough. So we're gonna continue this discussion somehow, long tail, once the event is finished. So thank you, great audience, great panel. Thanks a lot, guys.